Hello, 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 everyone. What a day. Hit the requirements for a blow off top. Haven't seen too many of those lately. So, how is everyone doing? We got some misses with the major earnings. And I wrote the headline. I guess Apple's not going to save this because I had to start the live stream countdown before Apple results came out, and Apple results were ugly. So, let's see who's here. Good afternoon, Patrick. Waka comes in with the Apple miss. Hello, Waka. Hello, 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 Martinez. Good evening, all. Sorry you got greedy. Remember, don't get greedy. Learn the lesson. Learn the lesson. Even keel. Greed and fear are both not good for trading. Good evening, Anissa. Apple miss on everything. Yes. If this doesn't take the markets down, I don't know what will. Waka, don't you know it's just buy everything? Go buy everything. New highs next week, probably. New highs next week. Come on. George raised rates, missed earnings. SPY 4,500, baby. See, George just figured it out. It'll just be a temporary pullback. Nothing to see here. Looks like someone big going to blow up. What a squeeze. Persistent buying. Why would that be someone's blow up? I mean, I think retail's going to get blown up. That's what I think. Gap up tomorrow, another 1.5% on top of that. And it could, unless today's low is key now because of blow off top conditions. Hey, Paul. We'll take a look at Apple. I can't look at all this. I saw the first miss since I think, when's the last time they missed? Was it 2016? Feedback greetings. Well, thanks for the feedback. Greetings, Ted. Let's see. All right, hold on. We'll bring on Bob in a second. We'll bring on Bob. By the way, we have unemployment, non-farm payroll Friday tomorrow, so remember that 1 hour before the open. We got 15 minutes after the open S&P Global Services and Composite PMIs, and then we got the ISM non-manufacturing, which is pretty much services, and anything non-manufacturing. And you got all those numbers coming out 30 minutes after. Then it quiets down with only the rig count. So that's where we stand now. Before, this is a snapshot at the end of the day. I mean, you had stuff. Could you imagine if we didn't have this massive rally today? Google, Amazon, and Apple would be absolutely executed. But since they had the absurd rally, they're pulling back to just some key breakout levels so far. I have to glance at Apple. Communication services, technology, and consumer cyclical leading at higher energy, taking it in the shorts today. 85% for a 25 rate hike. I almost said cut. Boy, I've been talking to too many people today, and they almost got pivot and pause in my head. Greed. Now, this is based off the closing data for the cash, almost to extreme greed. So, as I said, this met the conditions for blow off top. After, we had Amazon, Apple, Alphabet, Ford. All those are down. I know Ford was down too. Qualcomm was sort of mixed, but it was slightly up. Starbucks was also looked like a miss to me. U.S. Steel, I thought I saw that they had a beat, at least on part of it. So I did not see the rest. Tomorrow, it's pretty quiet. It's all going to be non-farm payroll, if that's even going to matter at this point. So with that, let me bring on who everybody wants to see because they don't care about me. They just want to see Bob Iacchino.
I think you're really not giving yourself enough credit.
Okay, it's 1% me, 99% Bob.
There you go. What's up, guys? What we got today?
How you doing, Bob? How you doing? Let's just see who else popped in here. Hey, Dr. Michael. Charles is Hershey's or bust. Coco's still in full blown bull mode. So hey, and Dave. All right. So Bob, any other real quick? I have questions for Bob.
Shoot. Apple's
I
down 3.4% right now, by the way.
All right. Well, you're gonna have to keep me posted. I mean, did you see that Facebook price action today up to like
Oh,
28%?
that was insane.
You know, they're buying today. First off, from a technical standpoint, now you know what, and we never got one last year. We never got a true capitulation bottom. But this kind of buying was generally happens at two times from all the testing, either after a capitulation bottom or at a blow off top. And this was not a capitulation bottom. I did my survey. I did my survey of professional, what I'll lump into professional and retail.
Yeah.
And, all right. Retail, 80, close to 87% was new highs this year. But you don't want to miss this buying opportunity. They're going all in. Now, institutional was not based off the market, but institutional, I wanted to feedback after people digested the Fed stuff, and people were all over the board. Like, there was everybody had a different take from Powell, which,
I could totally believe that.
okay, then you know what? They're all in Fed transparency, and everybody was just dumbfounded. And I know Tim Ross tried to clarify it today with multiple tweets and stuff about what he meant by financial conditions are tight. But the only thing everybody agreed on was WTF. You touched on this with the chart you showed yesterday. I mean, I saw the chart from Bloomberg Financial Conditions today, and everybody's just like, we have no idea what he meant by tight financial conditions. Everything's looser. Everything's just completely contradicting him, and he should have said what he meant when he said tighter financial conditions, because literally that's the only thing everybody agreed on. Nobody understood that one line. So I want to see if you have any new clarity for me.
What was the last part? You broke up.
I want to know if you have any more feedback, any more insight besides I think he just made an utter mess of that press conference yesterday, which we talked about. But getting the feedback, it's just people are all over the place with. Nobody knows what to make of it.
Yeah, there's a couple of interesting pieces of data that I saw today. Challenger job cuts over double the forecast amount, right? So we saw that. We all know that the layoffs that have been coming through and the job cuts that have been coming through have not been substantial when you compare it to the amount of jobs that were added. Bridgewater, you know what Bridgewater is, Mikey, right?
Yeah, it's the bridge over troubled waters.
Well, it's about to be. The largest hedge fund in the world used to be. I don't know if BlackRock's a hedge fund or not, but in terms of actual trading hedge fund, largest in the world, they just hired a co-CIO who is 37 years old. So if you look at it from that perspective, and this is something I've said before, the last time money had any real cost to it, she was 17. She was 17 years old. She wasn't even out of high school. The last time money had any real cost to it. And this is something that, by the way, it goes to the narrative that the Fed might be, flipping a little bit. I mean, I mentioned yesterday what I thought, and I thought that it was about as non-committal as a press conference could get. I thought the same thing of the Bank of England. I thought the same thing of the ECB, as to basically they were bending quite a bit, and I don't think they needed to, but that's not what we're here for, right?
Well, the Bank of England, I thought especially ECB was incredibly dovish. I'm like, they're I wouldn't be surprised to see them cut next.
They're data dependent, right? And if Powell's data dependent, given how the metrics for the CPI is going to change, this next CPI data, this next CPI release, I think it's February 14th. I could be wrong about that, but it's right around there, is based off the new methodology where they take a shorter period of time to do the comparisons. And if they take a shorter period of time to do the comparisons, then CPI is going to come crashing down. because the rate of change of CPI from less than a year ago or even exactly a year ago is going to be minuscule, because the rise came 18 months ago, right? And that rise didn't really abate, but they're not going to be taking that into consideration anymore. They're going to be just looking at a shorter data set to calculate CPI. So CPI is going to come crashing down. And I'm not a conspiracy theorist, but I think I told you guys this yesterday. I reached out to Luke Rahman and he said, if you believe the government has it in them to adjust the methodology in order to make it easier for Jerome Powell to dial rates back prior to the 2024 election, then if you believe that, then that's what they're doing. And then he said, I do believe that, by the way. He goes, but I don't want to go into the actual methodology and how things are going to change, which is fair. Yeah, so yeah, so that's what I got. But data's still coming in. Look, the bond market's starting to trade a slowing economy more than anything. Again, I said a while back in this live stream that there's only one of two things you can do. You can trade a slower economy, or you can trade a tighter Fed. And I'm referencing the bond market. The bond market is saying that the Fed is going to pull back and that inflation is going to be reined in. And that only happens with a slower economy for the most part. Emma Moolman, who's going to be on the podcast, I think February 27th. Somebody asked a question today on Twitter about soft landing. And she said, well, this could be a soft landing if you believe that there are soft landings, but there never has been one. So therefore, they're all soft landings because there are no soft landings. So she has an interesting way of stating things, but she was just basically saying there's never been a soft landing. So it's just a matter of what you call the landing that we're about to get. So
I have a question, but first, Bob, Connor asks, Bob, what's your thoughts on rising prices in commodities like lumber?
Well, if I'm being honest, Connor, I haven't looked at lumber at all. But I will say that when you look at copper, you look at aluminum, you look at soybeans, those are critical goods prices. I don't know, Mike, you want to put up a lumber chart where I'm saying this? Those are critical goods prices. And one of the things that's helped inflation dial back a little bit has been collapsing goods prices. So from that perspective, you have to watch the trajectory over the coming months to see if goods inflation is going to start to ramp up again. If it does, services inflation is not pulling back, and that means inflation isn't really going anywhere. But, again, I'll bounce off of what Sterling says there at the bottom, Mikey, is that the timing of the change in methodology is suspicious because there's been people out there saying they should change the methodology forever. And I'm not even saying the change in the methodology is wrong. Why wouldn't you want a shorter data set to decide what inflation is doing? An example would be housing. They look at rents and they look at owner's equivalent rents. So if rents go up, most leases are signed for a year. So if rents spike up, you get that in the data 2 years later, the old methodology. Then if rents come off, you don't get that in the data until 2 years later. So there is an argument for the methodology changing, as Sterling said, but the timing is weird. It's very weird timing. Why do they change the methodology during a time period when we have rampant inflation, as opposed to the 10 years we just had with no inflation? That's the time to change it.
Yeah, that's the same thing I was just going to say. They had years to change the methodology. Now, is there anything though that if all right, it looks like because of the shorter time frame, inflation's under control, and then we do get because if we're in a major commodity cycle, we could have another big ramp up in commodities.
Yeah,
that could. That could appear if it's based on the shorter you could have a big ramp up in inflation numbers again if it's a shorter methodology, couldn't you?
Yeah. I just want to point out, Waka Waka, your last two comments, if I'm reading them correctly, and maybe I'm reading them wrong, contradict each other, to be honest. Fed screwed up. They should have done 50. Oh, I'm sorry. I did read it wrong. I definitely read it wrong. You said they should have done 50, or at least sounded bearish for the stock market. Yeah, I agree. I don't think necessarily they should have done 50 because they projected 25, and those kinds of shocks in the market don't really help anybody. But I understand what you're saying. And yeah, I agree. So, used car prices, Sterling, you can confirm this. Used car prices are back up, and I think we're starting to see shortages on new car prices. Are we not, Sterling? I'm sorry, on new cars themselves. So I just had to get tires for a car, and one of the tire shops I went to said, I can't get your tires, interestingly enough. So then I went on Tire Rack, and I'm getting the tires I need delivered overnight. And then the place, which was a different shop that I asked to put the tires on, called me and said, you should have called me. I can get you those same tires. I'm like, well, a guy down the street said he couldn't get my tires at all. So I just figured all of you couldn't get my tires. No, 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 I can get them. I can get them. Well, what I think he was saying to me, if I'm being honest, was I would have charged you a lot more and pretended that I couldn't have gotten them. I think that's what he was saying. And so the supply chain, where in some places it's actually still a problem, in other places it may be being used as a reason to keep prices high because of other costs that have gone up. I don't know if Sterling heard me ask about the new car shortages. I think that's happening right now. I don't know how fast comments get through here.
No,
So, anyway,
it's about a 30-second delay.
Okay, so there's a Charles question for me.
Well, here, hold on. I've been saying used car prices would rotate back up due to new car supply chain issues. We literally have 26 cars showing that will get here this month. Is that for the total month?
That seems low.
Yeah, I mean,
that seems like a low number of cars.
I'm just glad I secured mine when I did.
Yeah, no kidding. I was actually looking at cars today because I thought maybe I'll just get a new car instead of getting tires for this existing car, which is starting to get a little long in the tooth. And I noticed that a new car version of the car I have, which is a car I like, is $10,000 cheaper than a used version that's only a year old. Literally, well, about $8,000 cheaper than a used one with low miles.
So, if I miss questions, you're going to have to put them back in. Because
there's a Charles question. I can't really read those. It's too small for me.
Hey, Bob, yesterday Powell mentioned private investment. He says will support the market, but where's it coming from? Congress?
Yeah, so he was basically talking about the 8-point-something% increase in Social Security. He called it private investment, but he basically said that money will be spent and go back into the economy. At the same time, said that conditions have tightened. This is the weird part about it, to Sterling's point. The timing of the change in the CPI and then the way Powell reacted when journalists asked him the appropriate and accurate question about financial conditions tightening. And he said, well, certainly financial conditions loosening. Certainly monetary policy has tightened quite a bit. But then he never addressed the financial conditions, which is monetary policy plus a bunch of other inputs. And it made me think that he knows that CPI is being recalculated. We all know it. And I'm sure the staff at the Fed has calculated what that might look like. And he might be able to claim victory. And again, Powell's not part of the political machine that makes the political decisions. Whether he's influenced by them or not, that's up to you guys. I don't have an opinion on that. He's certainly not part of the decision making, but he does live in that same rule set. And if he knows that the CPI recalculation is going to make inflation come down, this particular press conference showed it really clearly to me, because he said the disinflation process has begun. And financial conditions have certainly tightened. So if the recalculation of CPI brings us, say, a negative 1.5% month over month next week, the week after next, and let's say a 4.9% year over year, I don't think Powell's going to go out there and say, well, that's the change in methodology. I think he's going to say, well, monetary policy has tightened and the disinflationary price, and just keep the same narrative. And I don't blame him. at all, at all. He exists under the same rule set that all these other people exist under.
All right. Well, then again, what happens if it rears its ugly head again and starts ramping back up? Then what?
Problem.
Then because you go to a short-term methodology, short-term changes back to the upside could have a pretty big effect.
A huge effect. It'll ramp it right back up, especially in housing. To Waka Waka's point about condo prices ripping. Condo prices are ripping. Housing in Florida here has bounced, although Florida overall is down. But some of the other places in the Midwest, like the Midwest, prices are ramping again. Away from larger cities, prices are ramping again. And that is certainly not going to help with the shorter duration calculation of housing costs. It's going to be quite the problem, in my opinion. But we'll see. We'll see how it goes.
Tying into the car thing, because one of the people I was talking to today, who's in the new highs this year camp, which was, and this was before we had the little pullback, but it's like based off this and over the last 3 days, what I'm seeing the markets. You know what? I'm taking my money because I'm taking the rest of the money that was sitting on the sidelines, going all in. And he's like, you know what? I'm going to take some of that extra money that's not going in the market, and I was holding off, but now I'm going to the Porsche dealer this weekend because there's a Porsche they have that I want. It's like, see, this is the financial. People are like, it's rah-rah mode again. Let's go spend, which drives up inflation again.
Yep.
So it's not going that, which is counterintuitive to the. Yeah, I know he's trying to pick one aspect of financial conditions, but that was such a dangerous statement because the markets and people are like, "Hey, let's go spend," because everything's it's blue skies again.
Yeah.
So, I mean, I'm expecting another ramp in inflation.
And you know, something I said a long time ago, Mike, and you agreed with me, this was a long time ago, maybe 6-8 months ago. I said I thought that there'd be a recession this time, but this is not going to be the big recession. The big one is coming like in 2025, 2026. These kinds of actions are what's going to bring that. If we end up being right about it, it's these kinds of actions.
This is where it's getting. I wanted to get it out of the way.
Yeah.
Because
so ISM.
Go ahead.
Go ahead, Mike. I'm sorry.
No, go ahead.
Well, the next release of ISM, the expectations, that's something I'm kind of watching, and the expectations are for it to go back into growth. If ISM goes back into growth, if the jobs numbers are big, and then CPI, think about it from this perspective, and then the new calculation of the adjusted CPI comes in weak, like I think it will, we have the first soft landing in history. And it won't be real, in my opinion.
You have the soft landing because of the way the numbers are calculated, though. It's
exactly. And that's not my normal thing. Like, I'm not that guy who says that's a Peter Schiff thing. Oh, they're cooking the books. They're cooking the books. That's not my thing. I actually don't even like that. So ISM is tomorrow, guys. By the way, it's expected 50.4. My thing is not cooking the books. I figure the data's the data. We're all looking at the same data. So if they're cooking the books, they're cooking it for everybody. And mine and Mike's thing is to find high probability trades. But there's never been a soft landing before. So if we get one now, you have to look at it and be like, I don't know, really? Really? I don't know. Something's weird.
And now I have a question. Let's say the data says soft landing. Because that's the thing that I'm still getting contradictory stuff. Everybody's like, soft landing, the Fed can cut. Well, I'm like, why would they cut? Why?
Right.
Why do you cut then? Because you don't need to cut.
We've spent all this time, all these analysts, and we know Williams, or people love analysts in this room, all these people saying the Fed has to get to normalization, has to get to they have to normalize rates. They're in the process of normalizing rates. Why would you cut them? If inflation starts to come down and jobs stay strong, that's still my point. Despite the new calculation of CPI, why would you cut? Leave it alone. leave yourself some bullets for the next crisis.
Correct. They normally have to cut like 400 basis points in a recession.
Yep.
So you're not going to cut ahead of that. And if your numbers are still strong, which is what would be so fascinating if it's a soft landing due to change in number calculations, and then inflation starts rearing its head again, it'd be like, pause, we got to start hiking again. What's the market going to do then?
Yeah.
Oh, well, we got to keep it interesting. It's tactile trading mode.
Tactile trading mode.
You know, everything's just nuts. Everything is nuts.
Yeah.
So, oh boy. I don't even know what else to say. I got to see where these things are trading after hours. So, do you think the ISM will print above 50 tomorrow?
Say that again. You broke up.
Do you think the ISM will print above 50?
I do, but I think it's going to disappoint versus the forecast. It's non-manufacturing, and so, the price index in there will be high too, and services has not begun to suffer yet. So, I think it will. I think it'll be like maybe 50.1, 50.2, somewhere in that range, and they'll make a big deal about it.
Any thoughts on non-farm?
See, they're not recalculating the way that the price indexes in the ISM are being reported. So we got to start looking at other things now that CPI is being done differently.
But then there's going to be more numbers that contradict each other, and people are going to be, which numbers are they looking at? And then Powell makes some, like, a blanket statement that everybody will be like, well, which number? Well, you know what are you looking at exactly?
Yeah.
So, any thoughts? We got non-farm payroll. Does it even matter tomorrow?
The price component maybe a little, but no, not after this week. It doesn't matter as much unless it's a huge shock. I expect tomorrow to be a fairly benign market day, to be honest, with the moves we've had. You know, it's funny. I was waiting to go on TD Ameritrade, and this afternoon. And Jenny Horn, who's one of their market reporters, and she's got a show called, I don't know, Young People Invest. I don't know what the fuck it's called. But anyway, in one of her market reports, she was talking about how the Dow was suffering because healthcare was suffering because of the Medicaid cuts, right? And then just prior to that, I was waiting to do the cow guy close with Shellady, and they were talking about how much Meta was up. And it made sense to me that Meta and the others were jacking up tech and healthcare was dumping down the Dow. But it more made sense to me that people are speculatively shifting out of value and into growth. And that's the big mistake. To me, that's the big mistake. We've never come out of a bear market without growth leading. There's another one of those nevers. It's always been growth leading out of bear markets. So that's the big mistake. Anyway. That's it. You guys go do your thing unless there's any. I don't see any more questions for me.
I don't see anything else. Why don't you have a good rest of your day, Bob?
All right. Hey, you got an email from somebody, right? Just so you know.
I got an email from I got an email, you mean?
They told me they were going to email you today. They're like, give us Mike's phone number. I'm like, email him. And then I'll give you his phone number.
Okay.
You'll know what it is when you look at it. I'll see you later.
All right, cheers, thanks. Oh, Coco, you'll have to ask him next week. Sorry about that. All right. Everybody can drop off now. Bob's done. So I will be on tomorrow to discuss non-farm payrolls. Let's take a look at some markets again. Today hit the conditions for blow-off top. Blow-off tops are notoriously hard to trade. Why? Because the correction can be sideways. It is a short-term pattern. Again, as I talked about right in the beginning, this price action happens generally twice. At capitulation bottoms with the reversals and at blow-off tops. Now, so that's where it gets tough to trade unless I generally like to trade the secondary reaction, not the primary reaction. the secondary reaction. So I will be on blow-off tops. Today's lows are key, but only with a follow-through close, not with just an intraday break. All right. You see here, we had, let's see, S&P back to very oversold. So definitely from a short-term trailing basis, I would be keying off of today's lows. From a longer-term trailing basis, the stop is much lower. Because this does not mean we have to plummet way down. This means we could consolidate, pull back to some key levels, and burn off some overbought conditions. And also remember, weekly cycles at the top. But if you just look at some of the weekly key levels, even returning to this week's lows would be back to 4,000. So, I mean, we got to sit there. What was the, let's see, we had 41.89 as the harmonic, and we closed at 41.91. Don't have anything. I will be keeping this harmonic. I'll just take it off. Doesn't matter. I can redraw them later. Again, the next key area, it doesn't have to reverse tomorrow. Blow off top can still, the conditions are there, but it can still continue for more than one day. And it technically, I don't know how it's going to do it with Apple and Amazon and Google all with their misses, but technically, we could gap up again, especially in the Qs and the spiders, in the stocks more so than the futures. But next level, 42.24 to 42.29. And then 42.64 to 42.78. And anywhere in here is a key topping area. And this is just, this price action, look, massively overbought on the weekly basis. So we're hit, but that does not mean it has to stop just yet. So the key areas, again, I'm watching. I would not be surprised to see some of this this dip in Apple, Amazon, and Google just get magically bought. Again, the survey I did from retail today was buy everything. Buy everything, clear sailing to new highs. To new highs this year. Clear sailing. And PE ratios don't matter. Doesn't matter. We're back in the full-blown growth mode, even like interest rates are back at zero. But overnight, I'm watching 41.59. Okay, and the breakout's 42.05. Very wide range, but you see the end of day price action here. So that's, I mean, these were just massive swings because any dip now is just anything's getting bought up, which is generally where people are rotating in late in the game. But this is a major topping area up here. And key support, first level of major key support is 4,095 to 4,100. The NASDAQ, again, I had 12,841 as the key, one of the key levels. And where did we close? 12,846. So after hitting the 75% harmonic and backing off a bit. NASDAQ major support 12,250. Again, long way off. But I'll watch today's lows. Until then, I'm still going to leave this harmonic on here because we could easily retest it. You see, even at once it went through here, boom, boom, little support there, and we're back below, but I'm keeping an eye on that. Nothing really substantially breakdown mode until back below 12.5, though. Nothing very major right there. So, and then you do have gap left behind. Just keep that in mind for a longer term. Apple blaming exchange, headwind, and COVID. How could they be blaming COVID? I don't get that one. So, This is a blow-off top, but as I've said, I've tested the blow-off tops. They don't happen all the time, but they're notoriously hard to trade because you still get the dip buyers trying to rush in. That's why I like to trade the secondary reaction. The secondary reaction is generally easier to trade than the primary. If it's going to be a blow-off top, we'll get a pullback, then we'll get a snapback, little correction. It generally, V-shaped tops are rare. V-shaped bottoms are not as rare, but V-shaped tops are rare. They're not as rare in stocks, especially growth stocks that finally just peter out and have a very bad earnings report. But for markets, V-shaped tops are rare. You more so get rollover tops, rounded rollover tops. You do not normally get a spike up and a rapid spike down. You'll see that more often in stocks than you do for the market in general. So do keep that in mind. I'm not saying we're in top conditions. I'm just giving some feedback here. That's why I like to watch for the pullback, and then the secondary reaction becomes the easier one to trade. And also remember, Coco brought up Apple buyback. Apple still has buyback programs. And you do, now that earnings are out of the way for a lot of these techs, you have massive buyback programs still kicking in. So you do have that underlying support for these stocks, and we still can have, with probabilities, higher price action. But a pullback could easily come back to the daily rotation zone before another ramp up. Remember, we got those CPI revision numbers. Let's say we pause for a week and a half. Then we get the CPI numbers coming out, and everybody's like, those are great CPI numbers. We got to buy everything again. Could it keep going? Yeah. Don't discount stupid. Dow, absolutely nowhere. Dow did not partake. Down 15 basis points. I'm ignoring the Dow until it gets out of this trading range, pretty much. So I'm not going to even focus on it. Russell, so close to that target of the cup and handle. Oh, so close. But not yet there. So, very overbought. Let's see if it can eke out. But this is where, if you're trading the cup and handle and you get this close, I would not be willing to ride it all the way back down. Don't give up a buck to pick up a penny. The DAX closing in on that 87.5, 15, 718. Party mode, party on. Wayne's World. All right, so there's nothing. There's no shorts there yet in the DAX. The 10-year. Yes, we do have a potential double top. You can see it easily, much more easily on the weekly. And you ask, well, why isn't this the base? A lot of people would make that mistake. You got to drill down to the daily, and that's the lowest, and it doesn't invalidate it. So this little move never got to areas with it, and then we got the bigger double top. Dollar index, a little rotation back up to the rotation zone. So we'll have to see if we got any shift here, but we did not tag that $100 level yet. Actually, the dollar index sort of surprised me with the move today, with the little bullish reversal move. So, and we should be getting to a bottom after. We might get another retest, but then I will be really looking for another bottom. I was looking before we broke down, so we obviously didn't get the bottom, but I need another rollover play before watching for that again. I saw there was some massive call volume going off in the VIX. I think somebody else put that in here too. I only saw it right before the live stream. So that could be interesting, but there's no great pattern just yet in the VIX. Crude testing the trend line, still holding above it. Going to be interesting to see if we can finally get a bounce. Percent B buy on a trade above today's high with a follow-through close. So that's what I'm focused on. Where else do we sit? I said the Japanese 10-year spiking above 50 and the peg back at 50 again, with the yen finding a bid in here. So not much follow through just yet. The only thing now I'm really keeping an eye on with this is it came back down to a weekly double bottom potential. So if that were to trigger, which would need a yen close above 131.12, then I would be very patient on any shorts, especially with that reaction today after that rise above and then the dip back below. So we shall see with that. Euro, just back to little key support. Not much to do there. Pound, not much to do there. Bitcoin, little tried to eke out some new highs and reversal there. So we're going to have to see how this ends up. Tesla did have a really nice little 15-minute double top today. A really nice 15-minute double top coming back down, not to the full gap fill to lots of people in Tesla love to buy these before the full gap fill, which you see right here. So now I will watch for still another rollover, but that was a really nice short pattern intraday for Tesla. Other than that, there's no major topping pattern unless we start really breaking down below 180 again, but that would be back to the daily rotation zone. What else did I miss? If I missed, hold on, I'll get to some of the other ones that did earnings. So as managers, it would make a lot of sense to announce buybacks during quarters you're expecting to hit the wall. It does. That's a great saying, Mike. It should be my middle name, so I always remember. Okay. Let's see. Can I look at Amazon? Could you imagine what this would have looked like? See, Amazon's already, we're back in. I'm telling you, retail's looking to buy every dip now. Look, this was ugly. The Amazon numbers were ugly. Okay? But it's bounced back substantially. I mean, it's even, so until it starts really breaking down or we get a topping pattern, there's nothing to do here. If it gets back above the 200, you still have a key gap play up here. You still have a couple gap plays up here. You have a gap fill play to 115.66 and then a gap fill play to 120.60, which those would be the two shorter term targets I'd use if it does get up here. Now I'm going to be watching today's. Where's today's low? 108.88. What we could already be bouncing. It's back to today's low. So I'm going to be really curious over the next couple of days. If we break down and can't get substantially above today's low and roll over, then there would be the short-term gap fill play. But that just takes it back to the daily rotation zone. So that's not a long-term short yet. That is, I'd then be watching for the secondary reaction after the rotation zone. If we get back up and even open within, especially even open to above today's open, Then I'll be watching to see how much follow through strength we have. Google, see? Look. All right, Google 102, back to key support. Could you imagine if Google didn't have this massive ramp up where it would have, it only now gapped to, it didn't even gap down, it still has tomorrow morning, but didn't even trade back down to where it was yesterday's close. And it did technically trigger the double. It's returning to somewhere. I mean, I would not keep a massive stop on this one. This would be one I would keep a tighter stop. And I'd use intermediate targets. But this technically triggered the double. So we shall see. That's what's interesting there. By the way, on any rally up in front of even the gap fill for Google, I'd be watching at this 105 area with the 200 again, since it gapped above it. I haven't even had a chance to look at Apple, really, since they released. So they're back 144.95. What was yesterday's close? 145.43. So just slightly below yesterday's close, back to the rotation zone. It'll be interesting to see if this gets bought up too tomorrow. But again, the secondary reaction is going to tell us a lot of stuff. A lot of stuff. Even on a little pullback, I'd be watching yesterday's low with the rising rotation zone. It'll be interesting to see. I'm very curious to see where these open tomorrow. Another one. We had Qualcomm. Qualcomm, so I didn't dive into this before, but they beat on earnings, missed on revenue, and they also look like a gap down. But their key support is still about 129. They're trading 132. So, let's see if they get bought tomorrow also. I can't say it enough. This is where I love the secondary reaction trades, not the primary ones. Starbucks. Another gap down, but just back to us, not even back to the last breakout support. Not even back to the last little breakout support. So just going to be keeping an eye on the rotation zone there. Do I have any advice for taking the Series 7? Not if you've I mean, I took it years ago. I didn't find it tough. The biggest stuff was just a memorization of a lot of the rules that you're never ever going to revisit. The option stuff, but you know, my background was options. The option stuff was easy, but just don't rush through the questions. Other than that, the bonds and, you know, treasuries weren't tough. It was just really whether you have a good memory for all the asinine rules and regulations. And most people, unless you're going to be in compliance, you're going to forget all that 3 months after you took the exam, and the only time you're ever going to need to be reminded of it is through compliance. So just don't rush through. Yeah, I had plenty of time, so I never felt pressured for time. And if there's something I couldn't remember, I just came back to it and then sat with the ones I couldn't remember, which were generally a weird regulation or something. I don't have a problem. I think, hey, cash, park it in short-term treasuries. Look, short-term 4-week bills are paying really decent on an annualized basis. I don't have a problem with that at all. That's why I said it's tactile trading. If you're not in, remember when I talked about the long-term portfolio versus short-term. This is still just short-term trading. Interesting enough for the long-term stuff I followed, which is the long-term system, and I'm not talking about the purple line thing. I'm talking about, and I'm not talking about closing above a 62.5. I'm talking a long-term system to says when the shift in and out of equities long-term actually has gotten farther away from the shift because it does use fundamental data. And it does take into account stuff like short-term rates, which are risk-free rates. So it's actually on this rally gotten farther away from going into a long-term buy. Because again, the market's beyond price for perfection. I mean, I didn't understand this. We have earnings were not good. Yeah, the revenue beat, but earnings were not good. And I heard everybody, you got to buy Meta on their blowout earnings. I was like, blowout earnings? They missed. Oh, they beat on revenue. And their users were stable or a slight uptick. Okay, so I'm going to chase this 28% higher? No. So I did not get that one either. What else have I missed? NOC. Don't be afraid of missing out. That's where people get into trouble. So I brought up my survey of retail. Because when they're going all in, I'm like, oh, you can still trade it, but don't get married to it. NOC. Yeah, if you're looking for a really potentially tight play, it's not quite there yet. But if this gets a pullback and holds these most recent lows, gets a pullback again over the next few days below 435.46 and really holds these lows and then triggers the double bottom above 449.02, there could be a nice bounce play against major support. Let's take a look at that on the weekly. I can't put up the targets yet because it hasn't even done. So what you don't want to see, so you want to see this key level hold. Why? Because if you get a close below about 427.50, you're into a weekly clear path lower. All right. Now, if we get at least a little short-term top, you could see something like, since Northrop Grumman is a defensive stock, I'm not talking aerospace and defense, I'm talking defensive stock. Okay, so you could see a quick little pop in it. But then if we go back to raw mode, and it breaks down below this key support, I wouldn't want to be touching it and bottom pick without a good reversal signal. Look at coin. I did not look at coin today. Well, you had stuff like coin, short squeeze. You've had the rebound in crypto. Does this change anything? No. I mean, this is just no. This is just a chase the thing higher. I don't know the short interest on coin, but we've had a lot of other stocks like this. Carvana, which actually had a big intraday reversal, but this coming off its lows. I mean, this has been what, a triple from its lows. You know, they're still going to file for reorganization / bankruptcy. So at least reorganization. Now, what type of bankruptcy, they have to do. But the car vending machine, even with the bounce in used car prices, is not rip roaring back. But you had a bunch of people jumping in there. You even had the Best Buy, Bed Bath and Beyond up on the news that they're missing interest payments. These guys are filing this month, but not in the Reddit boards were all over this. So, you have Arc to the moon. Get the flip around this. Arc to the moon. That's what's so interesting. Everything is now beyond price for perfection. It's not hard. If you score more than 70, you studied too hard. Oh, I guess I studied too hard. I don't want to risk a 70. What if I got a 69 or a 68? That'd be a super bummer. I'm not going to sit through that friggin' thing again. Ugh. Was that for Northrop Grumman? You like the PE on it? Yeah, it could be. Just be careful. I would keep on that again. Keep a tighter stop rather than a looser one. What are my thoughts on TEVA? When are their earnings? Next Wednesday? Well, what are my thoughts? You break below $10, it would be a good short. Until then, it's just a play going into earnings. You got major resistance up here. Look how many times it's topped up here. So, I would not be short it going into earnings unless we broke down below $10. Other than that, I'd be watching for a significant topping pattern. So if it's long, I'd be trailing. Other than that, I have no thought on it. I don't trade a lot of these pharmaceuticals ones because they can be really weird. But overall, I don't mind trading the patterns. So anywhere up in here with earnings, if it does break down, could be a nice short. And this thing can run to the downside. Just like once it bottoms, it runs back to the upside. So that's about it. All right. GPC. Then my eyes are getting a little blurry. It's been a long day. It's been a long day. GPC. Going into earnings on the 23rd. Look at the longer term chart. Oh boy. Yeah, as long as it stays above this key little zone here, it's already done its pullback. There's no decent buy pattern, so as long as it stays, let's see. There was a daily %B buyback on Monday, the 23rd. Then a little sideways basing at the top of the rotation zone breakout to the 50. So in the short term, for the long, if you're the longs, as long as you don't really close back above about 165.80 on a closing basis, you're pretty decent. On a retracement basis, the key targets I'd be using 173.85, then 177.32, which also is a nice breakdown shelf and now resistance shelf. So if you're trading this and if you get the close above 177.32, I'd play for the higher. Going into earnings, I'd play for the higher this. So right now, it's already triggered from my perspective. It's bias patterns. On any pullback, you just don't want that close below 165.80. Getting a little toppy up here, but weekly cycles can still run higher. So again, pullback could be a play from a bullish perspective. From a short perspective, would not be looking for a major breakdown just yet. It would then have to get below about 160 again before I'd start watching for a breakdown play. What else did I miss? What? Oh boy. Why did that reset? All the chat stuff reset. Hold on. I don't remember what the other one was. Trying to find it again. Sorry about that. General Dynamics. Actually, interesting enough, you had no red close below the 62.5. Right now, I don't have a pattern on General Dynamics. I'd at least want the close above 233.50 area, but then your problem is you're running in the rotation zone. So, I'd actually be watching for another pullback play in this from the long perspective. I'd be watching for another, especially if the market starts. Again, this is another defensive stock. So you could still see a little follow through if the market pulls back in the short term. But if we stay in rah-rah mode, I'd be targeting a pullback and a pattern off a pullback. It'd be much more interesting down here from a trade perspective at that 87.5 to 100% level. Or even if it doesn't pull back that far, if you got a double bottom pattern, then I'd be much more interested than trying to do something here, because a break of here, it would just be a really quick scalpy trade. I would not be holding this at this point. It would be a scalpy swing trade on the long side, if anything. First time viewer fib guide? No, I use harmonics, Darwin. Thank you for being here. I use harmonics. I found they tested out better than fibs. I don't know if somebody else answered that. Happy Jacks, Series 7, Series 65, CFP. I had them all. Did you have the Series 3, Happy Jack? So one a lot of people did not have, unless you... I had a Series 3 too. So... once people realize the Fed's not cutting rates, there's no more heroin, so to speak, then we're going to price the fundamentals, which are clearly deteriorating. The fundamentals are deteriorating. Again, that's why we're watching for, and people are paying up for deteriorating fundamentals. Go figure. But, again, markets can stay irrational longer than you can stay solvent. You got to trade these things. I'm telling you, people are looking for any reason to buy their cash sitting on the sidelines. And They'd only be tactical. And I'm not talking people looking because they know what key patterns are. I'm talking people that are looking, saying they're expecting new NASDAQ highs this year. So you think they're going to be out on the next rollover? No. All right. You use harmonics too? Well, very good. You should consider tuning in more often, Darwin. And I don't even use it the same way Scott Carney does. I do some patterns that I don't go through here, like some of the harmonic patterns similar to what he does, but I use, for most people, simplified harmonics based on 12.5% increments. Am I a broker-dealer? No. I gave up all my professional licenses. Well, I let them expire because I didn't need them anymore. Okay? And trust me, if you have all your professional licenses, you should technically be paying professional market fees and everything else, which I don't need to pay for professional data feeds and everything else because I'm not running money for anybody. I'm not doing anything like that anymore. So I don't need it. Just becomes a headache that you got to manage, and then you got your fees go way up. So don't need them. If fees didn't go back up, I probably would have kept them, but you have all these professional fees. And if you're technically still licensed and not paying for that, you're technically in violation. So you got to keep that in mind. Why did my GD? I had the wrong levels on that. The 87.5 was 273.16. And we did get a red close. So I did have the wrong level. Sorry about that. Is Apple now green? Well, thank you for subbing. I really appreciate it. Again, we have a very good community here. Like participation. Holy, you gotta love this market. You gotta love it. Oh, fantastic. Oh, this is going to cause so much pain at some point to people, but until then, you got to just trail your stops from the long side. This is absolutely fantastic. Actually regaining the 200. Oh, what is Apple going to take out 153.56 tomorrow? Wouldn't that be something if it does the whole, if it retraces the 50% decline? Oh boy. Pavneet, the market's looking forward to growth in 2030. Oh, this is priceless. I mean, Apple, this is not a strong growth company. Look at the earnings report. People are going to be paying sooner rather than later over $30, especially if they miss again next quarter. 30 PE. Oh well. Hey, have fun. Have fun while it lasts. Have fun. AMD. Let's just see AMD. Oh, I saw an alert go off on this earlier, and yep, it hit the first target on that double. First target. Look at that first target. 88.82. What was the high? 88.94. So, even a pullback here. Oh, this is just. And it's now closed above the 62.5. So the probability, no guarantees, but the probabilities have shifted. So not only do you have the double probabilities, you have the harmonic probabilities. All right. I'm going to wrap it up for now, though. May the markets be crazy. People who are just buying these, hey, do what you want. Tactile trading, trailing mode in the short term. Wouldn't get married to anything in the long term. They're tradable patterns. Don't get married. With that, I will be back after non-farm payrolls tomorrow morning. Everybody have a wonderful evening. Thank you for all showing up. Bye for now.